All right, some of you guys are busting my chops about Weebles Wobble. You said that was the Bozo the boxing thing. So let me see if I got this one right. Because when I was growing up, I loved chess and checkers, but war games are my favorite. Stratego and Risk. Risk, right? The game of strategic conquest. Now, why am I bringing that up? Because it feels like every time I read or look at what's happening at the Federal Reserve, that's what's going on right now. I mean, it's just absolutely amazing. And, you know, listen, the members there are drawing lines in the sand. At least 5 have come forward to say they want to hike rates. Overnight, Mary Daly had some really incredible comments in my mind, just thoughtful stuff. So she said, while Warsh has removed that biased stance, once you hike, you cannot go back. It will take multiple years of conditioning, stop-and-go style rate actions, including intra-quarter or intra-year reversals to disrupt this market reaction function. That's so important. But the problem, though, is that the media has been focused on other things, including this. I find this to be kind of crazy, right? The financial media rallied around Jay Powell. We got to have independence. We got to have independence. Then, of course, they've condemned Kevin Warsh in its early attempts to be independent, to be independent thinking. They say, well, thinker rather. They say, no, you're hurting credibility. And this morning, there were reports that President Trump keeps calling Warsh a whole lot of times. Not sure what they're talking about, but I'm glad we've got Wolfe Research, their chief economist, with us, Stephanie Roth, to help us with this. So Trump, he's calling Warsh a lot. So this is the meetings that the presidents used to have with Fed presidents. You know, back in the day, it was really Nixon pressuring Arthur Burns, you know, get in my office or whatever. They don't do that as much, but how do you feel about the way all of this is playing out?
Yeah, I mean, I think it would have been better if one, everyone was clear that they were largely independent. And I think what we're starting to learn to some extent is that the president and Warsh are talking more than many people expected, which then raises the question about, you know, to what extent it's fully independent. The positive thing, like you mentioned earlier, is you have a lot of FOMC members who are making their views very clear and going to be following the data. So realistically, what matters most is the data that are coming out in the next 2 months. And that's going to really direct the path of policy from here.
What about the Fed itself? You know, so now there's a conversation saying, hey, it should be more of a committee, like for somehow it morphed into where the Fed chair has this power. Some even say it's a dictator, you know, for lack of a better word. Should it be sort of like one man or woman, one vote? You know, and when I hear people say that, it's almost like hearing people say we should change the Supreme Court. Like they don't like who's in there right now, and they want to diminish his ability to implement new policy.
Yeah, I mean, the good news, it is vote by committee, right? So they have to have a majority. Of course, if it ends up being a tie, then the chair could break the tie. But if we're in an environment where even if Warsh wants to go against the rest of the committee, right, keep rates on hold, everybody else wants to be hiking, they're going to hike. They're going to do it. And he's realistically going to get on board with the rest of them. And the FT article that came out today suggested that he is prepared to hike if the inflation data are high in the next 2 prints.
And by the way, this Jackson Hole thing is going to be lit, right? I mean, this is going to be lit. Like everyone's going to watch this because I think he'll have a chance to articulate what he's trying to do, as opposed to a Q&A thing with some gotcha questions. I love what you did with the Warsh commentary and the technique. You know, but you did add that there's a price to ambiguity. What is that?
Yeah, so there is a price in the bond market in particular, or really in risk assets generally speaking, of not really knowing what the chair wants to do and what is he following, the reaction function. So what do the data have to come in for them to actually want to be able to make a move?
Right.
And in doing so, because we don't really have a lot of clarity on this, you're seeing rates rise pretty significantly.
So here's the last Fed meeting. It starts, we're drifting a little bit on the 30-year. Again, we don't get the answers or the guidance that we want, and the 30-year erupts higher. Stock market crumbles. But Warsh did say he likes the idea that the markets, whether it's these kind of moves or not, are doing their job. He thinks that he shouldn't have to speak so much and that there shouldn't be such a Fed guessing game and that maybe bond yields have to go up or go down, but it actually also helps them in what they're trying to achieve.
Yeah, and every time he made comments like that, as this chart shows, you just saw the 30-year yield continue to move higher. I think what we learned today when the FT article came out, which presumably came from some source related to what Warsh was actually thinking, suggests that he might have to change his communication tactic to some extent. Now, he's not going to entirely change it. He does genuinely believe in not providing so much information, not providing so much forward guidance. But I think what we've learned is he's probably going to provide a little bit more information, right, because that just adds a lot more uncertainty, a lot more term premium, which means yields are higher, not lower.
Now, quick then, tomorrow the jobs report, what are you looking for? Right now, you're in the no hike camp, right?
Yeah, we're in a no-hike camp, and the reason is more about the inflation data from here than the payrolls data. Tomorrow should be a little bit uneventful. We're expecting 95,000, a little above consensus. Next week's CPI print, though, is going to be really a big one, right? There's 2 prints before the next FOMC meeting. And if it doesn't come lower than 0.25% tracking in terms of core PCE, the Fed's going to want to go. And we're talking about every basis point here matters.
So let me ask you then about this, because we had a better than expected CPI number, we had a better than expected PCE number, and still the chorus didn't. The octave is still loud that we must, attack inflation. That why are people ignoring at least those? I know they're small, they're not a trend, but the last couple of numbers have been pretty positive in terms of positive surprises.
Yes, I think that's exactly right. We had one print that came in a lot lower than expected. Now we're going to need the next 2 to also follow suit, and then the Fed will feel comfortable holding rates. But it's going to really depend on the next 2 prints. So that's why next week's CPI print is going to be absolutely critical, because if it comes in high, then that sets the Fed up to be able to be hiking in September.
Okay. Ultimately, though, with these task force. Warsh again wants to make some major changes. Are you in favor of doing some things differently at the Federal Reserve?
Yeah, I think there's always room for change. Now is not really necessarily a great time to be making major changes on the inflation front, for example, when we're still in the middle of the inflation fight. So, we're kind of stuck with the next couple of months, and there's not going to be much information from the task force at this point.
Right.
Am I in favor of a little bit less communication? Yes. Am I in favor of a communication vacuum? No. So I think it depends on the degree of change that we end up getting. Some change will be good, but maybe not so extreme.
I got you. Great stuff. Love talking. See you soon.
Thanks.